All right, good morning. It's Matthew, Mickey, and Costa on this awesome Tuesday, and we're doing our daily review. How's vacation so far?
It's stunning
It's not
here.
fair that
Absolutely
you're
stunning.
showing palm trees in the back, and I'm showing a map of probably where you're at somewhere like right there.
Quite hot, isn't it? Yeah. We got a
No,
canal just here.
it's cool because yeah. So it's cool because when I go on vacation, I do the same thing. Like I'll track the markets, I just don't trade them. But I like to keep up with my skill set, but I just don't go as in detail as I do as if I wasn't on vacation. If somebody from the chat can confirm that they can hear us, that'd be cool. Is anybody can hear us on YouTube before we go into our analysis? All right, no response yet. People are still loading in. Or they got sick of hearing my voice and they stopped watching, which is fine too, because it doesn't change my process.
Process is
All right,
process.
there's Jonathan. TP smacked from the 3 to 315. Yes, sir, it has. Okay, starting with our daily analysis, right? So we've already identified the fact that NFP Friday for this month was almost the exact same range and in the exact same spot as August NFP. We could not close above previous month 50% yesterday on the daily chart. So we're expecting to leave this NFP range to the downside for the rest of the week, targeting August 5th lows. And then after that, a possible April lows. So usually, if we got above previous month 50% and above NFP range, we're going to target new highs, right? Our very first target would be August highs and then July highs, right? But right now, we're slab dab in the middle. This is going to be a crucial week to see where the rest of September goes. I'm a betting man. We're going to end the month. Well, I am a betting man because that's what you do in the market. But I am going to anticipate once we close outside of the daily range. Once we close outside of the daily range, like these August 5th lows are going to be targeted. Okay, moving to the weekly chart. Right? So right now, 5% off of this EMA, which is usually the max extreme that I would prefer to see, is going to be the midpoint of this wick right here. Right? And these are the August 5th lows. Right? So I don't like, so right now this is the initial first target, is the midpoint of this wick. If we actually get to these lows right here. All right. Moving on to our 65-minute chart. Right. So yesterday we put the low of the day in during the Asia market, and then we came down during the New York and made a more obvious low. Remember what I told you guys before, right? Yes, this is the low of the day, but when it becomes an obvious RTH low of the day, right? You've got to be able to see. Like this was a hard trade yesterday because this looked like the high of the day, but in reality, it wasn't, right? We came down, we could not get back into this Asia range, right? And we rejected hardcore off of it, right? So at some point, you've got to cut your loss or your sells and switch your mindset. Now, this was an RTH gap fill, which has a 100% win rate on a Monday in this situation. So everybody should have been, you know, at least at the beginning part of the morning, should have been targeting this gap fill down here. Right now, we're back in that market condition where we're basing out and we're going tighter, and there's a possibility for this to be the high of the day right in here, right? So we're going to pay attention to that London midline, which we'll get into on the next part of our analysis, right? Okay. So little. Let me go to the 1 hour chart. New thing I wanted to do was to look at our possible weekly zones, right? Anchoring off of, using the vet to anchor off of 1815 to 1915, right? Because the 1800 to 1900, like most coding programs have glitches when it comes to 1800 to 1815 or 2345 to midnight because of the zeros or something like that. I don't know. I'm not a nerd coder. So, not sure. Oh, shoot. Costa fell off. So I'm just using the 1815 and the 1915, right? And, you know, like you can see, in the last 189 weeks, there he goes. He's back on. Something keeps beeping at me. It's so weird. All right, looks like Costa lost Wi-Fi. We can see that there's a 49% probability of this 8.5 standard deviation being hit for the week, and there's a 68% probability for the week here, right? The average weekly range is around 1,090 over the last 8 weeks, right? And so what I'm looking for, is this to be the weekly range for us to establish the high of the week either today or into Wednesday, and then for us to go lower, right? And that's based off of what we saw on the last chart using NFP in the previous month, 50%, right? So if that's the case, right, this 5 standard deviation, once we get to the high of the week zone, needs to hold, right? But if we blow through it, so these are the 3 highest probable scenarios, weekly profiles, that we are seeing. So let me put up the dates for that so you guys can refer them. So this is the week of March 21st, 2021. This is the week of November 28th, 2021. And this is the week of January 31st, 2021, right? If we were going to follow this weekly profile, we should have went a lot higher on Monday, and we should have spent the overnight session above so far yesterday, but we didn't do that. Instead, we're following the characteristics of these weekly profiles. Now, this doesn't mean that I'm going to trade around these weekly profiles. It's just giving me, I use the weekly profiles the same way that I do our highest probable trade that we put on every single morning. Like, it's cool and all, but like, I'm not going to sit here and trade it blindly, right? Live price gets to trump how I engage with price, right? Or the direction that I'm thinking. So let me build an objective tree real quick. And let me select these. That should be all of them. Open up a folder. Name it weekly profile. And that way I can hide it. Okay, so now what we're going to do is we'll turn this off. And we are going to get into our weekly analysis, right? So weekly clues that have been given up so far is that we took out previous day's highs. Yesterday was an inside day, was an inside bar. So we can anticipate that we can still return to yesterday's Asia and lows of the day, right? We've breached, well, actually, let me put this on the daily real quick. We're testing previous day midpoint right now, so we're paying attention to the rejection of that to see if this is just like taking out these highs and then distributing lower, or if we're going to find footing on previous day midpoint to go higher. So now we're going to do our time base, our projection base, and our structure base probabilities. Starting with midnight. Put the midnight snap on. I mean, it's already set to 16:15, so we'll just do settlement. Wish I was on vacation. So settlement at 18,700. Says it has a 95% probability. Huh. How bizarre. I know, right? Cherry. So this says settlement has a 95% probability. That means something's glitching. Go back to chart. All right, well, we're not going to touch that. Like, I want send that to the guy in charge of this code, and let's see. Oh, that was something else. So that moved it. Reload this. Nothing has a 95% probability in these markets. And if they do, that's cool. All right. 08 to 1600. 1615. 15-minute chart. Make sure settlement was selected. There we go. Let me confirm. That is anchoring off of midnight 15. Got to change the time to New York. Hit OK. Let's see if it updates. Okay, now we're cooking. There we go. 65% probability. I was about to say I'm pretty confident. All right, moving on to mid 1800 now. I'm trying to get this fast so I can start doing other assets like gold and crude oil in the mornings. Globex open. Which is at 723. And now let's do midnight. $651. And this is 75%. All right, so we've done our time-based probabilities. Now we are going to do our structure-based probabilities. So right now on a 15-minute chart, this is the highest high right here, 1800. This is the lowest low. We're using the 12-hour period from 1800 to 06 to find the highest high and the lowest low probability from that time point to 1600, right? You can either use the VET, you can use Midnight Snap to figure that out. I have a spreadsheet because I've already used those to pull all the probabilities, so I'll just be referring to that. And no, I'm not sharing it. Like, you guys go do the work. Like, I believe for most of the people out there, it's good for them to, you know, go through the exercise of finding the stuff themselves. All right, so structure point 1, structure probability 1 is at 1800, and that has an 82% probability. And that kind of falls in line with that old saying that if you make a new previous day high during the Globex session, so we made a new daily high right here, taking out previous day high, that we typically return to it in the RTH session. However, because yesterday was an inside day, that skews the probabilities of that stat. All right, and this was the 5 o'clock, which has 82. So 82 and 82. That's fun. All right. Now we're going to do our projection-based probabilities based off of what Asia and London have done. All right. So we see that Asia was short true. London is short true so far. Let's put our midlines. Make them obnoxious pink. Asia OU line. And then we will make that a template. And then we'll do our London OU line. Because what happens, why these OU lines are important, and why I keep telling you guys to pay attention to the 930 1030 OU line, or the midline as it develops, you know, is because based off of what Asia did based off of what London does, the shifts of these, the rejections of these OU lines, will shift the probabilities of what the next session is going to do. All right, so now let me pull up my database. And right now I'm working with 2 degrees to be able to build an indicator that allow you guys to do this as well. So just be patient and we will get there. Right now you guys have everything that you need to get to this step right here, right? You've got the vet and the midnight snap to be able to pull these probabilities. The other steps in it is just drawing boxes. Previous month 50%, NFP. Right here, everybody has access to the 5 EMA to figure out if we're overpriced to the downside or upside on the weekly chart. And all right. And then you guys all have access to the captain's boxes and the ability to look at previous day's range. So this is the only part that the viewer does not have access to yet, and I am working to get you guys access to that. All right, so right now, let's say you're not part of the DR Academy, and you don't have the drive access. There's plenty of strips, like one set up for life by this individual, on the max time frame 15, and then you can draw out the sessions yourself. So what I like to do is unclick these two, keep these two clicked, change the times from 1930 to 2030. London is 03 to 04. New York is from 9:30 to 10:30. And as 9:30 to 10:30 draws out, this box will draw out too. And I don't know if you have the ability to put the midline in, but I'm sure it will make it a lot easier to see that midline. But right now we can see that the midline 1930 to 2030. Ooh, I'm glad I did this. Let me jump to a 5-minute real quick because my midline's off. Asia under is right there. And London's on fire. Okay, so we can see from that range, that price went below it and stayed true. Midline wasn't broken yet. I mean, it has this wick, but it wasn't broken yet. And now we're testing the London midnight right now. If we step above these two midlines and find support on either one, we can expect higher pricing. All right, now going back to the database, going to NQ, not choosing a day of the week, not choosing a time frame, just putting in what happened. Asia went short and stayed short throughout the rest of the session until 02. London went short and stayed short. Well, we don't know if it stayed short right now. The moment we breach over this London midline, the probabilities of us hitting this increase. So we're going to factor in both factors. So we're going to do that it stayed short and see what the probabilities of a so and this kind of stuff is why I will say that DR is an amazing community, because they help ICT traders, they help supply and demand traders, they help auction theory traders because of this aspect right here, right? Based off of what Asia and London has done, right? If we continue to reject off this London midline and go lower, right? We have a 39% probability of, let me redo this, 9:30 to 10:30 to be 39 plus 11, so that's 50, 59% probability of 9:30 to 10:30 being at least like that. So we'll put below London highs. If we breached it, okay, we have a 22% probability of engulfing London highs and lows. If you guys can hear my English bulldog in the back, no, I'm not considering that a midline break yet. All right, and then we have 7, 6, 13, 13, 5, 18, 18% of 9:30 to 10:30 holding London lows, right? So let's walk through this. This is representing the 9:30 to 10:30. We have a 59% probability of doing this move and holding this high. We have a 22% probability of 9:30 to 10:30 engulfing both sides of this London range. We have an 18% probability of this movement right here. If we don't breach this between now and 9:30, right, and step above and find footing on here, these are the probabilities, right? So that's if between now and 9:29 we don't step above London mid and breach the current London highs, right? Let's make this where you guys can actually read it. All right. So if we do, now that's scenario 1. I'm pretty sure I misspelled that, but it's too fucking early to care. Now, let's put scenario 2 on real quick. So now let's do our projection-based probabilities first. That's going to drive me crazy. So let me hit enter right here. All right, now let me put, because this is what live price is currently doing. Scenario 1 is exactly where we're at right now. As we speak right now, this is what we can expect to scenario 1, right? Just the way I explained it to you guys. So now we're going to do scenario 2. Well, first we're going to put in our probabilities, our projection-based probabilities. So far, we've done our time-based probabilities, our structure-based probabilities. Now we're going to do our projection-based probabilities. So scenario 1, change this to blue. So 18,798, and that has 54%. $18,915, and this has 35 based off of scenario 1. $19,107. Pitch. $107, and this has 20%. $19,337, and that has a 13%. And then we're going to do this once I put scenario 2 in. We'll put the probabilities there as well. This right here. $99%. And this is out of the 450 days of, so we started off with 4,200 days, and then based off of what Asia did and what London has done so far, it has left us with 420. It has left us with 450 days left, right? And that's what these numbers are derived from. 56. Oh. Open sesame. There we go. And this has a 90% probability if scenario 1 plays out. $72. $53. All right. So remember, let's go back to the 15-minute chart. Remember, this is scenario 1, right? Scenario 1 is if we continue to stay below this high right here. These are the probabilities, and they're skewed to the downside, saying that we will expect more downside movement. Now, what we're going to do is we're going to say, what's the probability, since we're right on the London midline, of us coming out and having a false day, which is highly likely right now, right, based off of where we're at, of coming up here and taking out this London high and making this a completely false day, right? We're going to put those probabilities as scenario 2. So in scenario 2 right now is we do step above London mid and breach the current London highs. So scenario 1, which are the first numbers, right? It shows us if we stay below this high right here, we can expect to target these right here. Scenario 2, where's scenario 1 at? Dang it. There it is. So this is scenario 1, and this is scenario 2. The difference is the don't statement, the don't versus do statement, right? We have until now and 8 o'clock for that to happen. I mean, we can even do it between 8 o'clock and 9:29, right? All right, so now let's say we do that. Let the database load up. And as expected. All right, so now we're going to start with this one right here. We're going to put S1 for scenario 1. And then we're going to put S2 for scenario 2. This still has a 96% probability of being hit, even if scenario 2 plays out throughout the day. This one we'll put S1 for scenario 1. This one we'll put S2. And this still has an 80%. Bizarre. How bizarre. Right? But in order for these to be hit, what criteria needs to be met? Let's say we step above and find footing on. For us to actually hit these targets, what's the early indication? What's the alert? Can't hear the bulldog? Nice. Are you sure about that, Danny? Because everybody always complains when I'm on a call with them that they hear my dog snoring. So scenario 1 is if between now and 9:29 we cannot get above this London high. These are the probability scenarios. 2s are if we can between now and 9:29 get above this high, right? But the first scenario, I mean, the alert for that to happen is if we step above and find supporting on these higher levels, then the first alert that we are coming back down here is giving up this high, coming back down to it, and then the confirmation is giving up the London OU line, and then we start trading towards that, right? All right, so now we're going to put in this probability for scenario 2. So this is scenario 1. And this is scenario 2, which has a 53%. This is scenario 1. And scenario 2, if it plays out, now has a 27%. Going up, there are higher levels. This is scenario 1, 54%, and scenario 2, 86%. Scenario 1, 35%. Scenario 2, 69%. What the fucking hell? Oh, okay, cool. Scenario 1, scenario 2, 29%. Okay. So now let's go back. And then let's fill out this part. So we already discussed, we put our time-based probabilities, we put our structure-based probabilities, and we put our projection-based probabilities on. We said scenario 1, if by 9:30, like we maintain the respect of this structure where we don't take out this high and we do not breach this midpoint, right? Then there's a high then this is what 9:30 at 10:30 holds, right? There is, and this is just a recap, there is a 59% probability that the 9:30 at 10:30 in relationship to this London range will be below this high, or like that, or even like that. There's a 22% probability that we will engulf it. And then there's an 18% probability that we will maintain this low right here, right? So now we have to do the same thing for scenario 2. Where is my scenario 2? There it is. So now with scenario 2, there is a 28% probability we engulf. There is 18 plus 14. Fuck, I hate doing math this early. So 32. 32 plus 12. So 44. And then 10, 10, 28. 28. So now if scenario 2 breaches, right? So now if scenario 2 breaches, we can see, let's just do this like this so I stop losing them. There we go. All right. So if scenario 2 breaks out, like happens, which says we stepped above the London midline and we violated this high between now and 9:29, here's what happens, right? There is a 44% probability that 9:30 to 10:30 will stay above this low right here. There's a 28% probability that we engulf, right? So this is 44%, this is 28%, and this is 28% that this London high holds. Is this making sense? Because I know this is an additional step that I'm introducing to the audience, because I have a confirmation that you guys have a good feel on this workflow process so far. Does this make sense? Before we go into our distributions, give me a confirmation or something. And so how does this play out with our weekly profiles? Remember at the beginning of the show, we went through and we put on our weekly profiles and we drew out, let's go to the 1 hour, and let's put on that object, that. Where is, right here. We said, actually, let me group this. So I can quickly turn it on and off. Make a new folder, call it daily profile. Okay, So remember, and then we can hide this, and we can put on a weekly profile. We said that the highest probable stat for the week looks like this, based off of the standard deviations, right? Based off of these standard deviations and these probabilities for the week, right? Based off of the Monte Carlo weekly profiles, right? We said that these two have the highest probability of playing out for the rest of the week, right? And so now, with that in mind, we said that this probability has a less likelihood of being reached because of the standard deviation and because of how yesterday played out, right? So now what we're doing is we're synchronizing the weekly profile, which is what we defined at the beginning of the show, with the daily profile statistics, right? And so now we have a good understanding on what to expect. And in order for for us to stay, either one of these scenarios can continue to play out and for us to maintain and respect that weekly profile, right? But we do need to see rejection between these two levels right here for that to hold. Because if I put the weekly profile back on, what's right there? The weekly profile, 68% that we come up to these levels. So if we do decide to go with scenario 2 where we breach the London mid and the London high, we need to see rejection here. And if we don't, and if we just blow right through it, then that's telling us that we got the weekly profile off, which is fine, right? And that we need to start going with that one that continues to drift higher. Is this helpful? Because I'm trying to take this in small doses so I don't confuse the viewer, right? And for you that come every single day to listen to me ramble, right? Like I want to make sure you get something out of this. So if there's no questions, I want to move on to the last step, which is put in our distributions on here. All right. So now, putting the vet back on, if it ever decides to load, that would be great. Oh, I need to put this back on the 15-minute. All right. So now we can see that our average daily range is 424. We've only done 37% of that. So we're going to draw out our average daily range, which is our average 10-day, which is 474. Average 10-day, which is 424. Sorry, not 474. Close enough. I'm gonna put this over here. Right? It's Tuesday, so we can see that over the last 45 Tuesdays, the distribution from 4 o'clock to 8 o'clock has been 44%. Just want to put that in there. Good grief, Biscuit. She is snoring like the old man. All right, we can see that the average daily distribution from 8 to 12 is 101, 101st Airborne. And we can see that the average distribution from 12 to 1600 is 73%. And we can see now that there is a discrepancy. Where's my 4 o'clock? It's 4 o'clock high. We can see that we've already met the 4 o'clock to the 8 o'clock distribution. We came down and now we're coming back up. Now, because the highest probability is to the downside, right? All right, let me turn this off because this shit's getting busy. There we go. We can see that, number one, this has a high probability of being breached. This level 1857 in scenario 1, it has a 99. In scenario 2, it has a 96. So there's a high likelihood of us hitting that. When do we hit it? Right? We can see that we've already maxed out our 4 to 8 time. Right? From a distribution standpoint, we've already maxed it out. Right? So we can safely assume that these two levels that have high probabilities of being hit are going to be hit between 8 and 12. Right? We can see that we have a probability of taking out previous day's highs last night, that we can continue and return to this. But the more, oh shoot, I forgot to do this part. Okay, for scenario 2, there's a 52% probability after 10:30 that we go short. For scenario 1, there is a 49% that we go long, right? So this is why all momentum is shifting to the downside, right? This is the hardest one to project at 5 o'clock in the morning, right? The 12 to 8 distribution. I'm on a show with you, but like I have zero confidence that this will ever hold. Why? Because throughout the day, I'm paying attention to the 9:30 to 10:30 midline. I'm paying attention to these. And then the closer we get to it, the closer I am aware of where this 12 to 1600 distribution will lie. Right? So I can just put it here. I can put it here. I can put it here. In reality, right, if scenario 1 plays out, this is the highest probable one. If scenario 2 plays out, this is actually the highest probability one, right? It's okay to not know, because when you're forecasting and using statistics, the farther away you are from the statistic, the more likelihood you're going to have error, which is why, like, I do these levels first thing in the morning, but I also have these scenarios in mind to understand how that 12 to 1600 distribution is going to go. And I'm really making the decision between 9:30 and 10:30 where that is more likely to go. So don't get your hopes up, is what I'm saying. But for now, we're going to put it down here because this is the highest probability and it lines up with the average daily range. The one thing that we're missing is if this is the average daily range right here, and we're expecting to go from this 86 probability for scenario 2 to this 80% probability from scenario 1, even how it's playing out right now, there's going to be overlap unaccounted for, which is right here, right? This right here does not have distribution built into it from these 3 distribution time frames. So that should be an alert to you that something's off, right? So we're missing something of that puzzle. Maybe it looks like that, but then the offset, the unaccounted distribution is right here. From here to here where the average daily range is, right? So those are things that you have to consider when you consider these probabilities and where those distributions lie, right? Maybe this is the high of the day that happened at 1800, and then this is the highest probable scenario, which makes sense, and it lines up with the distribution and how it plays out. Does this make sense to you guys? Because if it does not, right, you need to speak now. Look, we're already breaching during scenario 2 with that London midline. Which is pointing, so this would be if scenario 1 plays out. This would be if scenario 2 plays out. So you have 2 possible scenarios for the day, right? Each going, and because we've shifted momentum to the upside, this could be definitely a high probability, right? Your job is to pay attention to the scenarios, the if-then statements, to see what side of the stats that the daily profile wants to deal with, right? All right, with that being said, I am going to, you only live once, stop loss will be used when I'm dead. Austin in the house. Actually, the Asia range, yeah, the Asia range, I'll have to do some research on that to see if this Asia range was larger than on average. All right, so with that being said, I'm going to conclude the show, right? And hopefully you guys got a more in-detailed look on how to use time-based probabilities, structure-based probabilities, and projection-based probabilities, line them up with what price is already done, and how to build the 2 scenarios of the day to understand where the highest probable trade is. Now we do this to align our mechanical systems up with it, right? Of how we trade. All right, I'm going to jump because that is our time for today. It's 6:30, and do you know where your stop losses are at, Austin? All right, later, guys and girls.